Theo Trade. This is Don Kaufman. It's March 6, 2019, and you are watching the Theo Trade evening video. So on Monday's video, I kind of questioned, is risk really making a comeback? And I think we're getting that answer today here with just about, 10, 12 minutes left in the trading session. The S&Ps are down some 18, but I have to tell you, there is some very peculiar trade going on. And I'm going to point that out. So before you run out and start to position yourself for an onslaught of risk, there are a couple of absolutely key factors that again, we need to point out in this video. So again, we answered that question the other day of, is risk making a comeback? And I think the marketplace also gave you its answer effectively today. But here are a couple of the standouts that you have to be, again, completely aware of moving forward. First and foremost, so the S&Ps are down. It's only about 0.6%. Granted, we have about 10 minutes to go to the close. One of the things that's held thus far, quite frankly, I'm not sure if this is going to hold into the close. It doesn't look good. Is that the other day, specifically on Monday, when I'm referencing the other day, let's go over here to a 30-day 1 hour. We are right now holding above the lows. The lows happen to be 27.67. Again, 27.67. Right now we're holding 27.73. And the other aspect that really happens to stand out in the S&Ps, people, we're having a down day. Again, the S&Ps are down, 15. They've been down 20 the entire trading session. What do we see? 1.3 million contracts. Really? 1.3 million contracts. That's the best you can do. I mean, this is effectively a low liquidity, a low volume sell-off. All right. In today's liquidity, just take a quick glance at this. It's not a standout at all. It's not a standout to any stretch of the imagination. Now, again, granted, there's a few minutes left, but this is not going to make, some drastic move, if you will, up in effectively in volume. On days that there's big turns in the markets, we want to see upwards of 1.5, even 2 million contracts trade inside of the S&Ps. So there's no real, if you will, oomph behind this marketplace, right? So again, that happens to be a big standout. And at this time, we have not crossed below some of the lows from Monday, and we've actually been rather resilient right around this 2770 level inside of the S&Ps. Nevertheless, we move forward. The other aspect, again, that is a real standout today, it's the sectors that are effectively leading us, to the downside. And this is not, if you will, a very bearish indication. However, it could absolutely turn into it. What I'm actually referencing in terms of sectors, right? These are, again, this is the S&P 500 sectors. If you're not aware, and I'll mouse over it in a second, what I'm actually kind of drawing on right now, that happens to be none other than energy, and this is healthcare. Now, energy and healthcare are getting whacked back today, but why is that not a huge concern for us? Because quite frankly, they're not very large sectors. They're dragging the markets down, dragging them kicking and screaming. But, when it comes to energy and healthcare, come on, those things pale in comparison to what? I don't know, financials, maybe the monsters of tech. All right, which, again, when we start to look at this on a sector-by-sector basis, the fact that energy and healthcare right now are leading some of the sell-off, it's not that this can't turn into something real. At this point in time, you have to look at this. There's low liquidity, and two, if you will, non-event sectors are actually driving us lower. At this point in time, this isn't a sell-off, This is actually drifting listlessly into the sunset. Again, could turn into a sell-off, and that's something that we're going to elaborate upon here in just a moment. So as I was saying a moment ago, let's look at these two sectors that really make all the difference, and that happens to be, we'll key into the financials. Now, I talk about the financials pretty much at nauseum. We've talked about this 2650 level on almost every single evening video lately. We have come off the 2650 level, which is much more indicative of a bearish move. What you need to see to turn this into something a little bit more fierce. Here's Wednesday. Coming into Thursday, Friday this week, you need to feel the fear. And if you need to feel the fear, it has to happen inside of those financials. Along with the financials, again, let's say the financials, look, all right, we have a marketplace that's drifting a little bit lower right here, Nevertheless, the financials are stronger for example, than the S&Ps. That's not, again, the financials are not leading us lower. If we're going to drive lower, and I mean really drive lower, you have to have the financials punching through on a percentage basis. You see the financials should be down, 0.8%, for example, when the S&Ps are only down 0.6%. Then, and only then, are we going to start to see some real kind of bleeding of the marketplace, right? But there's a lot more to it. This is the monsters of tech. What's the monsters of tech? That's the conglomerate symbol that we created. It's a Facebook, it's an Apple, it's Microsoft, it's Google, it's an Amazon. But as you start to look at the monsters of tech, okay, this is not fierce sell side activity. What are they down? All right, a whopping what? 0.3%. So again, let's not read too deeply into this sell-off, at least as of yet, given the fact that both the financials and, again, the monsters of tech are not on the strong side of selling. Again, specifically the monsters of tech, they're down about 0.4%, with the NASDAQ down about 0.6%. Again, for a driving sell-off, you need financials, you need big tech to kind of lead it. When I talk about big tech, let's look specifically at Microsoft over here. If we can't pull up the monsters of tech, we could pull up Microsoft, and you can see Microsoft again. This thing's actually up on the day. Netflix up on the day. Apple, okay, it's 0.5%. What's 0.5% amongst friends? And Facebook is actually up 0.5% on a day. Really, when it comes to the monsters, the only thing kind of taking the brunt of the hit happens to be none other than Amazon, which ironically is enough to actually pressure this marketplace. So the monsters of tech, okay, and financials, strong relative. All right, next on our list over here, you got to look at the VVIX, okay, because the VVIX kind of leaves us in a little bit of an ambiguous situation. Now, I mentioned this last week, and I've been reiterating this. There have been some big buyers of volatility. If you're looking at the VVIX, what it really is, the VVIX, it's the volatility of the VIX itself. If you take a look at the VIX and the VIX options today, this is actually really, really light. So when I say this is a little bit ambiguous, there's light trading here, 300,000 contracts, a big nothing burger, but we are effectively buying some volatility, okay, in the last couple of trading sessions. So take it for what it's worth. Volatility in the VIX itself is absolutely on the bid. So again, we're kind of left in this lurch. We're like, wait, I think we're starting to slip to the downside. We're starting to slip. The broader markets are starting to slip to the downside. Okay. What's it going to take? Again, what's it going to take to see some strong sell side? Again, yes, you have to see the financials kind of kick in. Sure, the monsters of tech have actually going to take the brunt of the hit. But, okay, what you really want to talk about right now, and that is fierce, it's the Russell. Okay, we have to really take a detailed look at the Russell. Now, some of you guys are familiar with Russell, okay, specifically Russell futures. Others of you might be more familiar with, for example, IWM. The reason I'm bringing up the Russell, okay, let's look back, all right, let's just look back now on a 3-year daily. The Russell, okay, and I'm zooming in and kind of zooming out as we go here. The Russell, first of all, was on the forefront of all the sell side activity coming into September, October, November, December. In fact, the Russell, when I say it was on the forefront, the Russell was in the midst, okay, of an absolutely hideous sell-off, okay, that actually progressed into the entire marketplace. It was in the midst of that sell-off, though, again, in early September was that slide, and we were on a number of positions and in a number of positions in the IWM specifically. So the Russell kind of led there. That's not the only area of concern. There have been a number, again, of key sell-offs that have happened in recent years that have actually been led specifically by the Russell. Another one, okay, that you can actually point out, the steep decline that occurred in early 2018 was also, of course, led by the Russell. But the Russell has been on the forefront of a lot of the moves that we've seen much more recently. And that's why it's kind of the area of concern. You're seeing the S&P slide. Okay, you're seeing the Russell, again, really get whacked back. And again, on this, when it comes to a percentage basis, let's put this into some perspective. Because just saying, right, the Russell's getting hit means absolutely nothing. The Russell actually peaked out just about over a week ago. It's been up, all right, on a year-to-date basis. It's been up 18% year-to-date. Where it's now, we've already had almost a 5% slide on a year-to-date basis. If you look back just over the last 3 trading sessions, here it was, okay? We're actually, again, just shy of a 5% move just in the last 3 trading sessions. So you want to see some risk. Again, it's playing out inside of the Russell. How is that actually impacting, if you will, some of the Russell volatility? It's inverted the Russell volatility. So here's another, again, it's a sign of emerging risk in the marketplace. What I'm actually pointing out in this particular circumstance, and I'll box this out, make it a little easier for you guys to see, you're actually looking at the front few expirations, okay, their implied volatilities, and again, this is specific to the Russell, have now flipped and are exceeding, okay, some of the back month just minimally. But we are seeing, again, volatility kind of invert in there. And when volatility inverts in a given product, it's on, it's serious. How does that compare to the spiders, though? Like if you're looking at the Russell, it's just isolated to the Russell. First of all, nothing's isolated, okay, anymore in terms of any product. Everything is interconnected. And again, the Russell's getting whacked today by 2%. But if you look at this and you compare it to the spiders, it's like the spiders simply, okay, are immune. Take a look, okay? The spiders are sitting there, 5 days from now, 11%, right? 2 days from now, the Friday expiration, 13%. Nothing is inverted over here. Nothing's even close to inverted. The implied volatility is laughing, okay, and just keeps right on driving forward inside of the spiders. So again, there's some big areas of kind of contention in this marketplace with just seconds to go to the close, right? You're going to find out in just the next few minutes here, even after the close, those futures are open after the close. Is this, again, as I said, 27.67 going to hold? It looks and appears like we're actually going to close just at it or even below it. Again, these S&P futures, they're open, as I said, 15 minutes after the close. We can continue to slip just a little bit off into the sunset here as trade kind of continues. It's a critical level in the S&Ps. Okay, in the days to come, you got to key into financials. Obviously, you got to key into the monsters of tech. That is what's going to be driving a tremendous amount of the trade. With that, thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.